Today, I'm going to share the 5 rental property lies that almost cost me everything. And this is for all real estate investors, but especially for the newbies that haven't pulled the trigger yet. My name's Chandler, and I've been investing in real estate for the last 10 plus years. I own over 230 units of residential real estate. I also own some commercial buildings and some storage units. And so I've had a lot of experience when it comes to investing in real estate. I made this video because I was lied to in a huge way early on in investing, and it almost cost me everything. And so you need to hear these 5 lies that I was told that I promise you will forever change your trajectory when it comes to investing in real estate. The number 1 lie I was told is don't buy real estate, you won't find tenants. Then you'll be sitting on this real estate that you bought and you're gonna be in massive trouble. The reality is if you don't know your market and you overlist your rental, it is going to be hard to fill. However, you can always just lower the price. This is why it's so crucial when investing in real estate to make sure you understand the rental market and you know what your property can rent for. You can do this by talking to a management company, hopping on Rent-A-Meter, talking to other investors. It's really not that hard to know what you should rent a unit for to make sure that when you purchase that unit, it will get rented and rented quickly at the price you're hoping for. Now, if you are an investor and you're in this situation because you can't rent out your unit, just lower the price or make changes to the unit so that it's worth what you've got it listed at. Not only have I been told this lie so many times, but I have so many new investors come to me with this fear. And I promise you, this isn't like selling some unknown product. People need housing, and if you're listed correctly, no matter what apartment you have, it's going to fill. The next lie I was told is very similar, and that is your tenants won't pay you, and then you're gonna be screwed. Now, is it a reality that sometimes tenants don't pay? Yes, but that's why you have to put proper screening in place. And if you're screening tenants properly, you're gonna find people that are going to pay their bills. And guess what? The majority of people, they do pay their rent because it's their house. They want to continue to live there, and so they're going to pay. And so as long as you've got good screening, you're going to be in a great place. Now, worst case scenario is something I always like to look at. And the worst case scenario with this is you end up having to go through an eviction. You do lose rent for the month or 2 while you're going through that eviction. You go in and you re-rent the property. It's really not that bad. It's not this catastrophic thing that's going to cost you money for the rest of your life. It's something that you can pivot, make changes, get a good tenant in there, and you're gonna be okay. And we take this into consideration when analyzing a rental property. We're expecting vacancy, we're expecting expenses, we're expecting the worst case scenario, and we're putting that into the evaluation of the property before we even buy it. So you plan on these things, you do your best to avoid them, and when you can't avoid them and they happen, you're gonna figure them out. The next big lie is good luck. You're gonna hate unclogging toilets at 1 in the morning. And a lot of times people would say this to me after they knew I already owned real estate and like, oh, I hope you're enjoying it. Almost like there was this bitter jealousy that they thought I was gonna be unclogging toilets because I invested in real estate. And this is so laughable to me because if you put management in place, which I always suggest, guess what? You're never unclogging toilets. As a matter of fact, your worst case scenario here is you forget you even own a rental property until that rent check hits. Or maybe you get into a situation where you've got a bad management company and you've got to figure out some of these problems. Well, guess what? You can always pivot and find a phenomenal management company in your area because there's always going to be someone with a business like that that can fill in. And so I promise you, you don't have to unclog toilets to get an incredible return on your real estate, even after paying a management company to step in and take care of all those things for you. All right, on to the next one, and that is don't buy right now. You need to wait until the next crash. Now, I have been hearing this for the last 10 years. While I've consistently been purchasing real estate and I've built a portfolio over $50 million of real estate. And every single deal I've bought, when I talk to people about it now, they're like, oh, I wish I could have bought when you did. That's my problem. I just can't buy 5 years ago, 10 years ago when the deals were good. I'm just out of luck. I just need to wait until that next crash comes. And I promise you, even if the crash does come, you're not going to be prepared because you don't understand how to invest in real estate. You haven't been making mistakes. You haven't been putting in offers. You wouldn't even know what a crash looks like or what a good deal looks like. And here's the other harsh news. Even if there is a crash and everyone knows about it, you're not going to know what to buy, how to manage it, or any of that. And you're going to be just as scared then, if not more scared, because there's a crash and everyone's scared. And that's the scariest time to buy real estate. So what makes you think you're going to buy when the market is going down, when you don't even have the confidence to go and find good deals right now? I promise you, the people that are successful when it comes to real estate don't wait to buy real estate. They buy real estate and wait. Now, the last big lie I want to share with you is extremely popular, and it's pushed by very big names like Dave Ramsey. And that is that debt is scary. Don't touch debt. Don't mess with debt. Buy everything in cash. And here's the reality. Debt is a tool, and if used properly, it can forever change your trajectory. It can make a huge impact in your ability to buy real estate and maximize your returns. When you buy real estate with debt, your money goes further. You get a higher return in cash flow. You get a higher return in appreciation. You get a higher return in principal paydown, because if you pay cash, you don't even get principal paydown. When you compare the overall return of investing in real estate, it is 4, 5, maybe even 10 times greater, depending on how many properties you purchase and what kind of deals you get into, if you are buying with debt compared to if you are buying with cash. Now, if this doesn't make sense to you, I've got tons of videos explaining this, and it would take me 10 to 15 minutes to explain. But essentially, you're going to be able to buy a lot more real estate, and when you leverage properly, it pays you a substantially higher return on the money you have invested, because $100,000 can either buy $100,000 property or 4 properties with 25% down, $25,000 in each, where each one of those properties is getting 3 to 5% appreciation. It's getting a higher percent return when it comes to your cash flow on each property. It's getting principal paydown. It's getting tax benefits. And so it really 10x's your returns using debt. Now, I want to be very clear, if you use debt improperly, if you over leverage, if you don't have proper reserves, debt can be something that hurts you. But if you use it properly, it can be a massive benefit to building a real estate portfolio. Now, if you can't tell, I'm pretty passionate about this topic, and it's because I see so many potential investors that think about buying their first piece of real estate for 1 year, 3 years, 5 years, 10 years, their whole lives. They're right on the edge of doing it, and they have these fears and these lies that get in their way, and it keeps them from ever investing, where if they would just get into that first rental property, they'd realize it's not that scary, and that a lot of these lies are busted. They're myths. They're not reality, and they are things that even if they do happen, even if these naysayers are right, they have solutions, they have workarounds, they have lessons to be learned that might cost you a little bit of money, but I promise it's worth it. So if you're on the edge, just pull the trigger, even if you make some mistakes. Now, I'm not saying to make mistakes on purpose. I'm saying educate yourself, get to the point where you have a good buy box, you understand what you're looking for, put in an offer, pull the trigger, go through the process, and see what happens. Because I can promise you, the worst case scenario that you've planned for probably isn't going to happen. And the best case scenario probably isn't even as good as you think. I say this coming from a place of knowing what it felt like being a 21-year-old kid with, not a ton of money in the bank, saying, hey, should I put a big chunk of this into investing in real estate? And I'm so glad that I pulled the trigger on that first property, because now I own over $50 million of real estate. The cash flow from that real estate pays for all of the lifestyle I could ever have dreamed of, and then some. And so I'm telling you, it's worth pulling the trigger on that first property, because I think you'll blow yourself away with what the potential is in the future. Now, if you enjoyed this video, remember to smash the like button, subscribe to the channel, hit the little bell, and let me know what questions or concerns you have, because I love looking at the comments and making videos that help you to get into that first rental, and if you're already in that first rental, to help you scale to the next one. Thanks so much, guys, and have a great night.